So this is the second in our series of COVID-19 panels directed at accountants and bookkeeper. I'm Peter Towers, the Managing Director of ESS BIZTOOLS, so welcome. Our other guest presenters today are Paul Barnaby, who's a prescriptive accounting consultant beyond accounting technologies, and he's also the Australasian representative of Plan Guru, which produces software for budgets, cash flows, and projected balance sheets. Our other keynote presenter today is Amanda Gascoigne. Amanda's a chartered accountant and trades as Amanda Gascoigne Coaching. Amanda coaches and mentors small and solo accounting practices all around Australia. So welcome to you, Paul and Amanda.
Thanks, Peter.
And we'll come back to talking to Paul and Amanda and hearing their comments shortly. If you have any questions during today's webinar, can you type them into chat, please? We are recording the webinar and we will be supplying every attendee and some other people with links to the recordings early next week. So if you miss something today, you're going to get the recording so you can follow it through from there. The first item I want to go through today is an update on what's happening with COVID-19. There's been, looks like a continual stream of information coming out of the ATO, as I suspect they're trying to play catch up, a bit like accountants trying to keep up to date with it all. Business owners who are actively engaged in their businesses could be eligible for JobKeeper. This wasn't that obvious, I didn't think, when the initial announcements come out about JobKeeper. Most of the commentary was basically built around employees. Sole traders can apply for the JobKeeper status. Partners in a partnership, but only one partner. A director in a company, but again, only one director per company, and a beneficiary of a trust, and again, only one beneficiary of a trust. The big qualification is, of course, that the company or partnership or sole trader must have suffered from the drop in turnover as required by JobKeeper, and as we're primarily talking today to businesses with turnovers under $1 billion, I imagine, the requirement is the turnover needs to have dropped by 30%. The tax office have also released the alternative tests, and the official legislative announcement was made yesterday. So there are 7 tests that have been identified where a business has commenced since 2019, where a equity interest in a business has been acquired, where an entity has been restructured, where a business has had a substantial increase in turnover, entities that have been affected by drought or other natural disasters in 2019, entities which have an irregular turnover that is not cyclical, and a sole trader or a small partnership where the sole trader or one of the partners did not work because they were ill, had an accident, or were on leave, and this has affected the comparison period. Now, the statement from the tax office says the commissioner cannot determine an alternative decline in turnover test in all circumstances. And then they're stating it is only in those circumstances where there is an event or circumstance, be it internal or external to an entity, that is outside the usual business setting for entities of that class, which results in the relevant comparison period in 2019 not being appropriate for the purpose of an entity in the class of entities satisfying the decline in turnover test. I think what that's telling us all is that there's going to be no other tests, and if your client doesn't fit in to one of those 7 tests, I don't like your chances of being able to get that client registered for JobKeeper. If anyone has a different view on that, I'm sure you can raise it when we go to questions later on. The coronavirus economic response package, that's really what I was referring to there. That was released by the Taxation Office in the last couple of days. I've talked about the alternative tests. So what I now want to move on to is introducing you to Paul Barnaby. And Paul is going to make this presentation on challenges your clients have in measuring COVID-19 business downturn and upturn. So good afternoon to you, Paul.
Hi, Peter, and thank you for including me in the panel today. I'll just share my screen and
Yes.
we'll get going.
Yes, your screen's up, Paul.
Great, thank you. Okay, so my topic today is the challenges your clients have in measuring the effects of COVID-19. And you'll see there that I've used the words business downturn, but don't forget that there are businesses there with upturns as well. But my point is that never before has it been as important as it is to help your clients measure that result. When I say upturn, there are some strange statistics coming forward. I heard the other day of a regional business that is having their Christmas all over again. It happens to be a newsagent. Magazines, books, and over-the-counter gambling is going gangbusters. But, of course, many of your clients will have downturns, and it's our job to show them where their cash flow's headed. So, just a little bit about predictive accounting, which Peter alluded to. What is it that makes me so passionate about predictive accounting? Well, perhaps a little of my background would be helpful, but before I do that, what is predictive accounting? Predictive accounting is doing in the future, for future periods, exactly what we're used to doing in the past, preparing financial statements that will reflect what the business is going to look like in future periods, whether that's 1, 2, or 10 years. And what's made me passionate about it is I, for quite some years, was managing partner of a second-tier firm, and it was during that time that I developed an interest in, and now a passion for, predictive accounting. So I now consult and implement for clients in that area. That includes financial analysis, strategic planning, but of course budgeting and forecasting. I do have my own consulting practice styled Beyond Accounting Technologies, but as Peter said, I'm the regional representative for a company based in the US called Plan Guru, which produces a purpose-built tool for that purpose. So I've worked with many hundreds of CFOs, accountants, and people in business, and my role, Peter, I like to think of is helping accountants and CFOs look like superstars. Okay, so I've no need, I'm sure, to convince our audience of the need for strategic plans and budgets, but there's just a couple of points here that I think are important. That old saying that if you fail to plan, you plan to fail is no more true today in the COVID crisis than it ever was, because businesses who've got a plan to get through this period are going to be more successful. Because by setting financial targets and then being able to measure the actual results against those targets, a business owner is going to be more focused on the strategies that are going to aid that success. And so it's your job to help your client operate like the big corporates, because they have done this process since time immemorial. And we'll help you to prepare three-way budgets and forecasts. So you need a budget. What do? You reach for Excel or Google Sheets, right? Wrong. Why do I say that? If I was to tell you that you should advise your clients that their historic accounting should be done in Excel, they'd look at you with raised eyebrows. So why would you prepare a future financial statement that doesn't use a purpose-built tool? Spreadsheets are great tools, and I use them every day, but they were never built for budgets. And if you want some evidence of that, Google a guy called Ray Pankow, Professor Pankow at the University of Hawaii. He's published a number of research papers which show 91% of those published spreadsheets have got errors in them, which the authors do not know about. I repeat, they do not know they're there, and yet they're published. That's scary. But here's another point. If you're going to do a budget in a spreadsheet, it's going to take you 10 times as long to prepare anyway. So why would you bother? There are a choice of applications out there, and I just suggest I can help you choose the best for technical features and abilities, but also the cost. So just a little bit of a taste here, but I'll perhaps refer to this a little later on. Here's a cash flow report where there are some deficits coming up in October, November and December. And I've been able to use Plan Guru, which is my tool of choice, to work around those deficits and develop strategies that not only removed that deficit, but got this company working back within its funding limits. And there's a example of a dashboard that perhaps you could be giving your client on a monthly basis, which is comparing, as we see at the top left-hand corner there, budget versus actual year to date. Alongside that, we've got a moving line of cash flow, and the lighter blue line is the cash at the end of the period. And you can see that that's moving up towards a nice surplus of 248,000 in June. You can have other types of graphs like the pie charts you see there, but that's just an example of what I'm talking about. So there you go, Peter. That's just some of my comments on how your clients are looking for assistance to measure the effects of the downturn or upturn, and this is how we can help them.
Okay, righto, thanks Paul. We'll just switch the screen.
And do you want me to go now?
Yeah, I'll just introduce you.
Okay, that's fine.
I now want to introduce you to Amanda Gascoigne. Amanda's a chartered accountant and will talk to you on practice tips to help you survive COVID-19. So welcome, Amanda, and I'll just switch so it's over to you. Thank you.
Thanks, Peter. Now, where has my disk gone? Hold on. This was working before. Why is it not happening?
Yeah, it's coming on.
Can you see the...
Yeah, it's on there now.
Great.
Just...
Okay. Play from start. Yeah, everyone can see that.
Yes, you're in the...
Perfect.
You're in presentation mode now. Yeah, so
excellent.
Over to you.
Okay, right. So thanks very much, Peter, for having me today. And I'm going to talk about practice tips to help you survive and, perhaps even thrive during COVID-19. So just a quick little intro for myself. I've been in the accounting industry for nearly 30 years, and I was an accounting practice owner for 18 of those years. Many of the lessons that I teach now had been learned the hard way. I started my practice back in '99 from home. So I can, I know what people are going through working from home. I did that for quite a few years before I moved out. A couple of things that I'm really passionate about is practice owners having a work-life balance and also earning what they're worth. So now I coach and mentor small and solo accounting practice owners all over Australia and in New Zealand, actually, have better practices and better lives. So I have a Facebook community called The Balanced Firm, because everything's about balance. And I'd invite any of the listeners here today or watching on replay to come and join. If you're a practice owner, come and join that lovely community of mine. So thanks for spending a bit of time with us today. I'm going to be talking about the COVID survival strategies. As I said, feel free to pick and choose the strategies that work for you. And I'd like you to also think about maybe how some of the strategies you could actually either implement now or even implement post-COVID to help you thrive. So these, whilst the presentation is COVID related, these strategies can be used at any point in time. So now more than ever, communicating with clients is really, really important. We've got so much information coming out in such, quick succession from the ATO. Things are changing all the time. So information we probably gave to them last week is now outdated. So we need to leverage that communication as much as possible. So using things like generic emails, newsletters, using social media, and even SMS. Obviously also because we're not in the office, so we can't actually see the clients face to face, where we probably normally would have done that. one of the things that I think is really important and has proved to be extremely important over the last couple of weeks is actually checking in with the clients that you have concern with. I think that's one of the real strengths of what so many practice owners and their staff have been doing, looking out for those clients. So perhaps they're not the ones that are sending emails or contacting you. It could be the people that are quite silent. So I'd encourage anyone who's listening that hasn't heard from some of their clients and you haven't had a chance to reach out to please do so. I'd like to also let you know that it's certainly okay not to give specific stimulus package advice off the cuff and for free. So certainly the generic information we can, but when people are wanting really tailored stuff for it from us, we probably need to not be so hasty to give that information. I think that was probably one of the things that I know I did in practice, and I know a lot of people do, because we're so busy, we tend to blurt out all the information at that point in time instead of being a bit more strategic about how we're actually getting it out to the client and potentially being able to charge for it. In making sure that you're actually advising your clients on your working from home arrangements and being mindful that often there's other people working in the house. Often we've got children at the moment with children off school. We've had school holidays. So just communicating with your clients how you're going to be working and keeping them in the loop during COVID-19 and being really proactive. So if you're getting lots of questions, or you will get more questions down the track, just think about those, the things that you're saying over and over again, and consider how you can actually communicate that en masse to all of your clients. This one is easier said than done, avoiding excessive work hours. And from the accountants that I've been speaking to in my group and offline, they have been doing some enormous amount of hours. And I guess a lot of that is necessary with the change of pace and what we've been doing over the last 4 weeks. But it certainly isn't something that's sustainable. So what can you do to, well, once we've got like a lot of these job keeper applications, what can you do to actually avoid working such long hours? So that comes down to really good time management and diary management. Setting rules and boundaries with your clients, with your staff, and with others about your work practices, hours, and availability. And start even using your out of office response. Clients are quite often used to, you picking up the phone or answering them, so quickly. But at the moment, we're watching lots of webinars, we're doing a lot of reading, and we just aren't available to actually take those responses or respond as soon as those things come in. So start using some auto responders, perhaps on weekends and out of hours, and resist the temptation to just go and quickly answer that email. Managing workflow is a big one because it's a lot of work in the office. So before COVID, you probably were thinking, I'm tracking okay to meet my 85% lodgement deadline and all the other things that are going on. But now COVID's thrown a huge spanner in the works. So thinking about what work you've got in the office and what you've got to do. Instead of letting that pile up and just focusing just on COVID, especially after we get the JobKeeper applications finished, think about what that work you've got in there and try to progressively get that done during the week. So mapping out times and blocking out times in your diary for your 2019 tax returns, for some BASs, for FBT and tax planning and the like. So just try to think about how you can actually manage all of that workflow, because we don't want to get those clients, offside that are waiting on that work. From there, you may be able to realise that you may need additional resources, so that now's the time to sort of ask for those or look for those. And perhaps even delegating some type of work to another person in your office that could perhaps be the office champion. So are they going to be the office champion of JobKeeper or FBT? And then working out what your client's priority plan is. So I've heard so many times that 2019 tax returns, you've been asking for queries and asking for queries for so long, and sometimes months, and all of a sudden the information's now there. Who are we going to give priority to when we've only got a limited amount of hours? So that's something to think about. Working from home and your productivity doesn't have to be 9 to 5, and working out what your ideal work schedule is very important to work that out, to save that stress levels for yourself and also from those around you. I know just then getting on this webinar now, I've had to go and tell who I'm co-working with, my husband and my son, to get off any internet so I can actually have good broadband while I do this. So communicating what those boundaries are with those that you're working around. Setting up your office so it's really inviting, organised and ergonomic, so you're not stopping and starting, and maybe a place that you can just shut the door and walk away from. Having a daily to-do list, like a lot of these things we're going to do in our office, but they're ever more important when we've got so many other things outside of our office that we're dealing with in our home. Having a daily ritual to start and end the day, I find is really helpful. Again, it might be just, you know, shutting the door and pulling the curtains across or something like that, just to signify that, you know, you want to switch your brain off from work and go out and be present with your family. So how are you going to switch off, and how are you going to manage your stress levels and create balance? For if you've got staff, that's really, I know that was probably one of the biggest issues a lot of practice owners had about their staff working from home and how they can get them to be productive and chargeable. So just really about, that is about communicating very clearly the expectations and KPIs, being proactive in giving them the work. It's no different than them being in the office if they're sitting there twiddling their thumbs because you haven't had time to actually give them work. So think about how you can have a few days in advance with that. Maybe some checking in morning and afternoon sessions, and little ways that you can keep the morale up. So one of my coaching clients, we got them to think about maybe sending some Easter baskets for Easter, just some things that can keep morale up. I'm not going to dwell too much on this one, but, you know, looking at your practice finances, reviewing your numbers, your own numbers, and spending a little bit of time where we're sort of cutting out a lot of commuting now. We have, after we get the JobKeeper stuff, maybe some extra time that you can actually turn your attention to your own numbers. And, you know, could you have been in a better position pre-COVID? So if you're not happy, think about now being the time to reset. And because this work is so new, it's not anything you've done before, and your clients really need you to support them in this. So whether or not you can factor in a better pricing for your COVID packages, which I'm going to talk about later, or maybe even thinking about a new pricing regime from 1 July that's going to actually remunerate you better for your efforts. Embracing and adopting technology. This is one of my favorites. I love technology, but I have seen so much resistance from both accounting practice owners and their clients about adopting and embracing this. And guess what? Within a couple of weeks, a lot of these things are getting embraced. So don't go backwards after COVID. Make sure that you keep a lot of this stuff happening. So, you know, electronic communication, signing, you know, using the apps and getting all your clients on cloud accounting. That's really, really important. And it's going to make, you know, obviously when you're doing these JobKeeper applications and reporting, it's going to be so much easier when your clients are on cloud accounting. So think about who you can swap over for that. Even video and phone conferencing, phone systems, we're all jumping into Zoom, we're all communicating in such a different way, and it's been really quite refreshing. I think a lot of people have been enjoying it, so why go back? Looking at paperless office, document management systems, and, you know, maybe even working from home if that's what you really like and you find that you actually could be productive. Maybe, you know, working that you might only go into the office a few days a week and do 1 or 2 days at home could be something that you're looking into. And finally, you know, making time for your family. What I am telling people in my group and telling my coaching clients and everyone I talk to, you know, our partners and our kids need us more and will love us more than any of our clients will. I know we want to help them, but, you know, the fact of the matter is our clients will come and go and the work will always be there. And, you know, it's really important to acknowledge that, you know, you all do deserve a life away from the office. And, you know, at the moment it's very hard, but really that resetting and the opportunity of using COVID to reset the way you're going to run your practice, I think is actually a huge opportunity. So, yeah. That's not all of the tips, and I've run through that quite quickly. I've only got 10 minutes, but I'm hoping out of those, even 1 or 2, if they resonate with you, that you actually start implementing a few things now and maybe think about some other things that you can implement, you know, before 1 July or from 1 July to have a better practice and a better life, which is my motto. Yeah, so that's it, Peter, for that section.
Okay. Thanks very much.
So I'll stop my share.
Yes. Okay. Thanks very much, Amanda. And if any of our viewers have any questions, can you please type them into the chat box and we'll answer them a little bit later on. And For those of you who are watching on Facebook today, welcome. And if you, excuse me, I'm losing my headphone. And if you have any questions, you'll have to send them via email to me. Thanks, peter@essbiztools.com.au. I now want to move on to reintroducing you to Paul Barnaby. And Paul's going to talk about the skills and tools you need to show them, your clients, where their cash flow is heading. So over to you. Thanks, Paul.
Thanks, Peter. I'll just share my screen again.
Yes, it's right, Paul.
Okay. Okay, so what I wanted to share with attendees today is what I think, having recognised the need to measure the upturn or downturn that's been brought about by COVID, what are the key aspects of successful budgets that are going to help your clients work through what is for some a dreadful time, but I think we can all learn something from it, as some of the comments that Amanda was making. There is always something to learn. A successful budget has got to be three-way. There is no point in just doing a revenue budget, because without the balance sheet, you won't be able to do cash flow. So you must, what is called three-way: profit and loss, balance sheet, and cash flow. And unless it's a startup that you're looking at, you must start with known data, in other words, historic results. And here's the biggie for me: every budget should be driver-based. When I first learned budgeting, I was told, take last year's results, add or subtract a bit for next year, and that's your budget. Well, no. Sometimes I think a good guess might be better. You've got to look at what drives the business, particularly in a downturn situation. You might have lost most of your customer base. We've got to look at what is the ongoing reality, numbers of customers, average transaction value. Those are drivers. But it's more than just the revenue and cost drivers. It's what is the investment that we've got. Are we going to be getting paid by our past customers? Maybe they have issues, which means that our balance sheet is going to be impacted by a much lower collection rate. Are we going to have to invest, as Amanda was saying, in some new technology? These are all drivers that you should take into account when looking at your budget. And here's another very important one. If you're going to create a budget, you've also got to have a rolling forecast. There is no point in preparing a budget. For example, with the new guaranteed loan schemes, I'm sure the banks are going to require proper budgets and complete business plans. And so it's not only important to prepare that budget, but you don't put it away and put it on the shelf and look at it in a year's time and say, how did we do? You look at it every month to see how we did. So we've got to be able to compare budget with actual, but also forecast, because that is a rolling expectation of what the year is going to look like. And obviously variance reporting is a must, comparing what actually happened with what our expectation was. And if you've got other reporting, because I find that this varies completely on a client-to-client basis, you've got to be able to provide them with flexible reports and configurable on a user-by-user basis. So you're now saying, let's go prepare a budget. Okay, well, let's have a look at a budget. Oops, that's not the wrong one, right one. Let's get rid of that. That's the one I want. Okay, so I talked about drivers. The case study that I've brought up here, Peter, is a computer company. It sells PCs, both box only and complete. It sells software, printers, and accessories. And the big driver for this company was their unit sales expectations. What are they going to sell and when are they going to sell it? And the other thing that has to be taken into account is seasonality. This company actually gets 40% of its sales in that October, November, December season. So I've actually, using Plan Guru, which is, as I said, my tool of choice, I've actually asked Plan Guru to calculate what the year's unit sales are going to look like based on an expectation of 2,200 units. And I've asked Plan Guru to allocate that across the year using that seasonality factor. So if you have a look up here where my mouse is, you can see that that translates to 147 units a month in the low months, 293 units in the high months, and of course 2,200 units for the year. And then that translates into the revenue dollars. I'll just cancel there. In the revenue dollars in the income statement here. And when I drill down here, you can see that the sales of PC box only are based on those unit sales, but then I've adopted a price of $450 per unit. So there is a very accurate summation across the months of the dollars, 66,000 in the low months, 132,000 in the high months, or 990 for the year, for our revenue from the sales of PC box only. And the rest of it has been done the same way. Now, in the context of a short webinar such as we've got today, I'm not going to go into huge detail, but just to quickly show you around Plan Guru and how it works. In the cost of sales side of it, I've calculated it on percentages, and you can see some of those percentages just come up as I hover over the cells. Then down in my operating expenses, I've calculated wages and salaries as a big one, and there is a purpose-built wages and salaries schedule over there. We can do that by person, and we can even get more granular than that. In the case of a salesperson here, I've got a base salary, plus I'm then calculating a percentage of sales, budgeted sales, for their commission. Roaring back to the income statement just briefly, you can see here that we're looking at a yearly attainment of revenue of 3.5 million, around 1.1 gross profit, and a net profit after tax of about 284,000. Again, looking at the balance sheet, I mentioned drivers. So here, for example, I've set up accounts receivable to run on 70 days average collection rate based on those revenue lines I've selected there. If you've got a scenario where you've got different collection rates for different revenue lines, Plan Guru looks after that as well. Inventory I've got set up to calculate at 120 days average stock on hand, and I'll come back to that in a moment. Over on the other side of the balance sheet, I've got drivers here for accounts payable, where I'm allowing to pay at 45 days on those costs and expenses. And there's other features of Plan Guru, which again, I won't go to too much detail, but it handles things like a bank facility. I've got here a bank overdraft facility, which has a limit of 500,000. And so that's been used in taking into account. And then we've got cash flow. If you have a look at the cash and cash equivalents up at the top of the balance sheet, you can see that that's forecasting for a negative between 200,000 and 300,000 over those busy months of the year. How's that come about? If we have a look at the cash flow report, which I've got here, you can see here that it's calculating that, starting with operating revenues and moving through the changes to give you an operating cash result, then looking at what might be provided or used by investment or financing. So if we have a look here at October, you can see there that I've got a very big negative operating result of 673, of which about 470 have been taken up by the bank, but leaves us with a deficit of 216,000. So what's caused that? It's the big increase in inventory, which you can see up here, 670,000. So the strategy there for this company was, over in the balance sheet, when we identified what was causing the problem, we were able to say, let's adjust our buying pattern so that down here in October, November and December, we limit the stock holding to 90 days, which would make sense because that's the very busy months anyway. Have a look at this deficit cash flow up here. When I click OK, it's gone and I'm now back working within the overdraft limit. And if I go back to the cash flow now, you can see here that that deficit has disappeared. And in fact, we're starting to get some surpluses coming up in February and onwards, coming up to about 172,000 at the end of the year. So people, that's just a taste of what Plan Guru can do. It's a purpose-built tool. I wouldn't be without it. Thanks, Peter.
Thanks very much, Paul. Just a question, Paul. I noticed last night the Prime Minister was quoted in the media of being a little bit short with some of the banks about taking longer than what he thought they should have in processing these applications from small businesses for the coronavirus guarantee loans of up to $250,000. Do you think that might have been caused from the bank's point of view? I don't normally stand up for banks, but would it have been caused because they were not receiving the applications in a proper basis? What budgets, cash flows, business plans?
Peter, I'm sure that you can't put together a proper business plan within a couple of hours. But if you are struggling with the financial stuff, it certainly could be a reason for it. And that's why, again, I just recommend to accounting firms out there to develop their in-house processes so they can deal with those applications as they come in, and they're not looking for staff to do it or looking for tools to do it. They are equipped to do it as they arrive. I heard an example of some assistance that was provided to a business in New Zealand terms. They've got a similar assistance practice over there. And a company applied for some assistance today and they had money in the bank account tomorrow. Now, that wasn't a bank loan, obviously. But the thing is, accounting firms have got to be equipped to turn those applications around very, very efficiently.
Yes. Last Friday, when we ran the first of these special webinars, our key affiliate then was Andrew Geddes, who many accountants know, of course. He's been around for a long time as consultant and as chair of Green Cross. Andrew's chair of 2 or 3 accounting firms, and he related the story of one of them helping a grazier client who wanted to borrow the maximum $250,000. They originally quoted the client $2,000 to put the applications together and a dot point business plan, but a budget and a cash flow forecast. The client obviously screwed his face up a bit about that, but they then sat down and explained to him what he was getting and pointed out to him that he could do it himself, but he might not get the $250,000 from the bank. He paid it and was quite happy because within a day or two, he was approved by the bank. So I think this is what we're coming back to Amanda in a moment. This is one of the messages Amanda's wanting to get across in her consulting role with accountants. We all need to charge. Accountants have got to be looking after themselves and charging, but they then need to be making sure that the client's receiving the right information. Is that how you'd agree, Paul?
I certainly would, Peter, but just to put into context the case study that I've just been looking at, it looked enormously complicated, but that case study took about an hour to put together, just under an hour, using the tool. So you're not sitting there crunching numbers for hours and hours and hours. It can be done quickly if you've got the right tools. Yeah.
We're now going to return to Amanda Gascoigne talking to us. And in this segment, Amanda's going to talk about pricing your COVID-19 services with commerciality and empathy. So how are you today, Amanda?
Great, thanks, Peter. How are you?
Not too bad.
Good. Lovely day here in Fingal Bay.
Right. Townsville's pretty good too.
Excellent. Would you like me to share my screen now?
Yes, please.
Perfect. And everyone can see that screen now?
Yes, that's up there. Very good. Thank you.
Perfect. Well, yes, talking now, pricing your COVID-19 services with both commerciality and empathy. So, it's not working. So look, I want to, really reiterate that, you are not a charity, that you are running a business just like your clients are. And, what we've been seeing over a number of years is that partner revenue and profit levels of accounting practices have actually been dropping. So there is so much happening in the space, which, a lot of practice owners are not getting the remuneration that they deserve. We've seen so many fee pressures even before COVID, and we're seeing them again now. So it's really important to be really thinking. I know we're trying to get all this work done, get JobKeeper, get everything done for our clients, but perhaps we just need to take a step back and work out what is actually going to be, the best practice for us in the longer term. So I personally believe for a lot of the SME practice models that everyone's running are really failing their owners, and it really isn't sustainable in the longer term. So you know, I can tell you as a practice owner for over 18 years, it is definitely possible to be commercial and empathetic, especially with our SME clients. So to work out, you know, what your pricing needs to be and your price point, and that's something that you feel quite happy with. First of all, when I work with my coaching clients, I get them to work out what their personal and their business cash flow requirements are, and basically reverse engineer it, what you actually need out of your practice from a profitability and, you know, a revenue side. I'd also like you to think about what you would be worth on the open market. So when I get to work with practice owners who've been in practice for many, many years, but are finding that, you know, they've lost a bit of their passion. They've certainly lost, you know, from a financial perspective, they're not getting as much as what they would have hoped for, but they've also lost touch with what they would be worth if they had have stayed where they were currently working when they started their own practice. So it's a really great idea to actually sit and also think about, you know, what your knowledge and your skill set is, and what would you be paid if you actually went out back into the marketplace. So I've actually gathered a few little stats here in relation to 2020 remuneration. So the first one I've got is from ABS, and that's actually just the average weekly earnings around Australia of all employees. So that's about an $86,000 per annum salary. As the heading indicates, it excludes superannuation. So that's just everyone. And, you know, as accountants, tax agents, we're in a really great position to see what other people are getting paid, because we're doing tax returns all the time. So we know what different occupations are getting paid, but we're just so busy, we're not actually even sitting there and comparing them with what we're actually earning. The good, bad and the ugly, they do all of their calculations based on a partner salary of $200,000 per annum. A pay scale partner salary, they're doing nearly 150. The chartered accountant's average New South Wales salary, so I'm in New South Wales, so I took this one. That's only just been released. It was in this month's Acuity magazine, and they're saying the average is 160,000. And then Hayes is saying for a regional practice principal owner, 125. So you can see there's some variability, and you need to work out where you sit in all of that. But I think when we've got the numbers and then we're comparing to what we're actually getting out of our practices, that's going to hopefully give you the impetus to, you know, actually put your price up if that's actually relevant for you. So of course we will do a lot for our clients at no charge. And I think the first 3 or 4 weeks during COVID, we've done an awful lot to our clients, awful lot for our clients in relation to this. So that counselling type service that we're just telling them, you know, perhaps just picking up the phone, talking to them, saying, we really don't know about a lot of the legislation, but we're here for you. And, you know, maybe you keep track of your time, but you're not actually going to charge that. And that's totally fine. That's goodwill. But, you know, wonder even if your fees pre-COVID actually had any profit margin or any profit buffer that you could actually use to offset some of the services that you're offering at this, you know, uncertain times and unprecedented times for our clients. Some do, some don't. But if you haven't got a buffer, it's very hard to continue doing all this work for free. So we've been told that we're actually providing an essential service. We are navigating JobKeeper, JobSeeker, some of the grants around the states. So we're actually providing an essential service. And I know we've got fee resistance. Our clients don't want to pay for a lot of these things, but guess what? They're actually paying for so many non-essential services. So just this week, the ABC ran a story that Australia Post has run off their feet. They're putting more people on, and they're delivering about 1.8 million parcels per day. Online department stores, their sales are up 473%, and fashion purchases are up 203%. So I'm here to tell you, even though your clients might be saying they can't afford your services, that, you know, this is a rip-off and, you know, how dare you charge us in these times, they're actually spending money on a lot of other things. So, you know, often you've got access to their bank feeds. Are they still spending money on their Netflix, all of those other non-essential services? So I hope that gives you a little bit of comfort that you should be charging for your essential services, and clients can afford to pay you. And that's what I'm going to go through in the next couple of slides, how you can get them to do that willingly. So maybe you need to revisit your current charge out rate depending on where your salary sits. compared to what I've actually indicated as some of the average salaries. Maybe you want to consider how much time that you've already spent reading, researching, advising and counselling to your clients. A lot of people have said that this has actually just overrun their lives. They're doing so much in this space. So are you looking at doing some, perhaps trying to recoup some of that money, or is that just going to be what you consider a bit of a sunk cost? Each practice will be different, and that's where that empathy and, you know, can come into it. You work out what's right for you. Thinking about all the different COVID services that you are offering now and may offer into the future. So at the moment, everyone is so so into the JobKeeper, but there's a lot of grants, and a lot of those have very short time frames. So there might be some grant applications you're going to help your clients with, maybe some business continuity work, maybe some exit if some people have decided they don't want to be in business anymore, and then in a couple of months' time, hopefully, maybe about relaunching. So when you think about all those different things that we can do for our clients, you know, potentially looking at packaging them up and standardizing how we're going to deliver those. Thinking about how much each one of those is going to take us to actually do, and then thinking about the value of each of these packages or each of these services. So that's going to help us articulate what we should be charging for each of these services. So, you know, I've seen in a lot of the groups this week and last week about, you know, everyone expecting that accountants should be doing this work for nothing. But my question to you is, why should you provide a cheap and cheerful service, a free service, a quick service? You know, what could go wrong? And we've already seen a lot of instances already when people actually do it themselves and go down that DIY road. They'll often bring it back to us to fix, and often fixing it actually costs more than us doing it in the first place. So really think about what are the disadvantages of clients doing this work themselves, and what advantages can they get out of working with you directly right now and paying for that service. When you think about what could go wrong, what you've seen wrong, maybe even it's other service that you've provided over the years, talk about those points to your clients. Let them resonate with that. Maybe it's a fear factor. Maybe it's they don't want to get in trouble, but they're doing something just getting it wrong innocently. But you make them resonate with that particular thing that's actually important to them. They will definitely pay you. So one of the things I really like to do, and I did this in my practice, I get my coaching clients to do this, is basically get these standard fees for everything you do. So whether this is a minimum charge for a tax return, a minimum charge for a BAS, a minimum charge for JobKeeper, that actually takes so much guesswork and emotion out of what you're going to be charging. So maybe sit with a few of these things. Maybe it's just a JobKeeper application, because we're looking at COVID right now, thinking about how long it's going to take, looking at your average rate, what you'd like to get your charge out rate, and maybe you do those on a couple of different charge rates. Then maybe that's one way of pricing. Then we look at what the value is. So maybe you can even look at what other people are charging, what the clients are going to get out of this JobKeeper. So for one employee, they're going to get $19,500 for the 6 months. 5 employees, you know, you can do the maths. How much are those clients going to get out of the work that you're going to do for them, to ensure that they meet the eligibility tests, to ensure everything gets done by these date-sensitive, sensitive dates. And then so that's on value. And then thirdly, that's where your discretion can come in. So you might want to, want a discount for some people. You might want to have that discretion for certain industries. It's totally up to you. But that's not, we're doing that process, having a look at a time, costing, a value, costing, and then your discretion, you actually can get something that's going to be totally aligned with how you want to run your practice, but also giving you a really great salary for the work that you're doing. And I had a university professor that once said to me, and I remembered when I first started doing this in my practice, when everyone was doing value pricing, I still wanted to do some time as well. But he'd said to me, you know, what you lose on the merry-go-round, you'll pick up on the Ferris wheel. And I have done these numbers in my practice for years and even now, and it actually does work. And, you know, it's like a client will ask you to do it, how much is it going to cost me? And they're worried, especially when they haven't got the money coming in. So that could be a reason why they don't want you to get it done for them. They'll try to do it themselves. But if you give them a definitive price as to what this service is going to cost them, they probably are more likely to say yes or no. You've got less chance of having disputes down the track, and you're going to be remunerated appropriately. So instead of discounting, maybe offer some new payment ways. So perhaps maybe some extended payment periods for some clients, maybe utilising your trust, maybe offering credit card options. I know a lot of small and solo accounting practice owners don't offer this type of payment for clients. And this is actually really a really quick one, because a lot of your clients, they won't have the cash physically in their bank, but they may have some credit on a credit card. So by us not offering, or by you not offering credit card facilities, you're going to be one of the last ones to get paid. So thinking about that, and the cost of those fees for having a credit card facility is a cost of doing business, and it is far less than you waiting an extended period of time for your payment to come through. Maybe looking at direct debit solutions such as Easy Debit or Integra Pay. Maybe looking at debtor financing options such as Moola Pay or Quick Fee. These are just some of the ways that you can actually help and assist your clients pay you what you're worth, but without actually stretching them too much at the present time. We don't know how long that's going to last for. So the situation, you know, we're saying it could be 6 months at least. So we need to be budgeting for that instead of thinking this is going to be over in a couple of more weeks. We've got a lot of things to still work through. We've got our March BASs, we've got FBT, we've got tax planning, we've then go into our 2020 tax season. And I believe actually spending the time now looking at how you price just your COVID fees and doing this as a little test case can actually have huge ramifications for you to actually start doing this with all of the services that you're offering. And, you know, once you do it once and it becomes so ingrained, it just makes things so much easier. My final point to you is that it is very critical for your survival that you look at this sort of stuff, what you do now, because, you know, your emotional, physical and financial success does depend on a lot of what you do right now. So I wish you all the very best as you price your COVID fees. There's no exact science. Everyone's going to do something differently. But that was what makes you as an accounting practice owner and your proposition unique. But you need to feel comfortable of how you've arrived at that figure. And when you do the numbers, look at that remuneration, look at your budget for your own practice and your own personal needs. That's what actually you've got the stuff there on paper, and that will help you create a really great pricing strategy moving forward. So any questions? And if you do have any questions that you would like answered, feel free to send those through to Peter, or here's my contact details. You can send me an email, connect with me on the various social media channels. I have a private Facebook group called The Balance Firm for SME accounting practice owners. And I have a weekly newsletter that you're welcome to subscribe to by sending me an email or contacting Peter, as Peter actually receives the 5 on the fly each week. So over back to you, Peter, if you've got any comments or you'd like to ask me anything.
Yes, thanks very much. Thanks very much, Amanda. And that was very interesting, this whole aspect. And I'm just going to move on here. We haven't got any questions that have been sent in, but I support what you just said. If people who are watching this video can send us through questions to peter@essbiztools.com.au. I will forward them on to Amanda and to Paul Barnaby, and we will get the questions sent back to you. And on our website, www.essbiztools.com.au, within the Survival in Difficult Times Learn More segment, we're going to place the questions and the answers that our panel members have given, so that you can go to them and have a look at them if you're interested in tracking the responses to the various questions relative to COVID-19 coronavirus, right through the whole segment from the very beginning, which seems a long time ago, but it was only 7 or 8 weeks ago, really, from the Australian point of view, wasn't it? Amanda, you've really brought out some interesting comments there about fees and services for accountants. I think it's very important. Everyone's got to finance their own business. It's like staying physically fit at this time as well.
Yeah.
Being healthy. You've also got to keep your accountancy firms healthy by charging reasonable fees to your clients and sitting down and talking to them. And I like the idea of giving a detailed proposal to the client rather than just like a one-liner. I'm going to do what's needed for JobKeeper. Go through and summarize what you've got to do so the client gets an appreciation of the work that you've got to put into this. And then there's the follow-up work. There's information got to be lodged with the tax office every month. Who's doing that? Are you doing that as the accountant, or is the client going to do that? It's all very important that you have this all sorted out.
And it is a bit of an unknown. And I think that even with a lot of the pricing, I know accountants are really worried that if they get this pricing wrong and they might undercharge an hour, but I guarantee if you look at write-offs and you look at getting the prices anyhow, chances are you're writing at least an hour off a lot of the times anyhow, because you know, you're erring on the side of caution. Now, wonder whether that was too long for this or too long for that. This stuff takes the guesswork out, and clients really do appreciate knowing what something costs. And, you know, put yourself in that situation when you go and get like a quote around your house for some landscaping. You know, if someone says, oh, we're going to charge you an hourly rate, we have no idea what goes under the surface, what they do to prepare a lawn, prepare garden beds, etc. That's also what we do. There's a lot of stuff that clients don't see, and often with ours it makes it really hard because there's no end product as such that they can physically and tangibly touch. So all businesses have this element, but as accountants, I think we're really worried about what clients are going to think, that they think that we're ripping them off and all this stuff. And we actually do get a lot, you know, there's so much opposition by clients and there is so much fee pressure. There's so many people undercharging, which actually is not good for the profession. So I really would encourage, it's one of the themes that, you know, I'm passionate about ensuring that if you've, you know, backed yourself, you've left a good, you know, firm where you don't need to worry about getting clients in, you don't need to worry about cash flow, you get your pay every week. You've left there to start this business of your own for, you know, lifestyle, for more money, for more flexibility. But what I'm finding more and more, and it's not just even people that have been in practice for a year or so, or I'm seeing people in practice for 5 and 10 years who are actually, they've lost their passion because it's just gone the other way. All this stuff that they thought they were going to get out of their practice, they're not. So we need to actually be working on our own practices first and foremost. And then, you know, clients will see that you are successful and, you know, they'll be attracted to you. So there is nothing wrong with accountants making good money. And when I went into accounting, you know, in the early 90s, it was a great profession. It was a very well-respected profession. It was a very well-paid profession. But it actually has, I believe, diminished. I mean, our professionalism and all that, there's nothing that's diminished there. But what people are getting paid is actually a lot less, you know, if you look at, you know, inflation compared to what it was then and comparable with other industries. So...
Yeah, I think a lot of that, and I think you know my views, Amanda, I think accountants have got to be offering this broader range of services to regain that professional recognition factor. And I see there's got to be some good points out of everything that happens in our lives. One of the good points out of COVID-19 coronavirus, I believe, is going to be giving accountants the opportunity to be able to illustrate to your clients, those who are watching us, that you're able to do more work than just the actual tax return preparation, because the Prime Minister's saying, go off and see the banks if you're looking for a short-term loan to be able to pay the wages, so you're going to qualify for the subsidy payment. To go to the bank, you need to be able to submit a business plan, budget, cash flow forecast to the bank. Now, some of our viewers might not have been used to doing this sort of work, but I think that's real accounting work, with the emphasis on the word real.
Yeah,
Real accounting work.
I totally agree. I think COVID is an excellent opportunity for everyone to reset in their business and in their life. And, you know, one of my sort of thoughts is that, you know, everyone needs to have a lovely life and a lovely business, right? They've got to be happy in both. They're not mutually exclusive. And I think we've been really, we're really at that tug of war, that we can't actually have all those things that we want because we're so just ingrained in what's happening in our business. We're letting everyone else dictate what we do, how much we charge, and we've actually lost control. So accountants need to get back in that driver's seat. Maybe they've got to have less clients. One of the things that when we look at clients, if you think, I mean, there's a whole heap of work around this, but the clients are actually zapping your energy, taking all the time. They're actually the lowest amount. They're contributing to the lowest, you know, amount of your fees. They're taking all your energy. And I think a lot of accounting practices have too many clients, and that's why they're run off their feet. They're doing all this extra time and not obviously even charging. So, I mean, I see the numbers. So I think this has got a really opportunity, and, you know, we're seeing the best and the worst come out of everyone during COVID, whether that's team members, staff, whether that's clients, whether that's colleagues, whether that's, you know, in your own families. I think this is a perfect litmus test, like, okay, who do I want to take in to the new post-COVID life? And really starting to be, you know, in control of your own destiny, and really living a life on purpose, and having a practice that actually, you know, a redesign practice that gives you just that.
Yeah.
And, you know, it's not that difficult, but, you know, it's really about everyone really taking the time. We're just so busy, not looking after our own practices. I know a lot of practice owners aren't looking after their finances like they should be. They're not paying, you know, the attention. Start treating yourself as a client, and actually say, what would I tell a client doing this, this, and this? And that is a really interesting exercise.
Yes, very. Anyhow, we need to move on, but if obviously, if any of our viewers, if you've got some concerns about this, please contact Amanda or myself, or Andrew Geddes, who's one of our panel who spoke a couple of weeks ago, or Paul Barnaby, who you heard earlier today. We've all been there, and there's various expertise in that group of people that can help you to face up to these issues. But we might just go through the closing off of this webinar now. Thanks, Amanda. Thank you very much for that. And I'm sure it's given our viewers some real items to think about. So we'll just go back to here. And our next webinar in this series of COVID-19 Survival Panel is on Friday, 1st of May at 12 noon AEST. Our guest presenters are Priscilla B. Smith. Priscilla is a trainer of bookkeepers and accountants on taxation matters that some of you may be very interested in. She does run training courses for people trying to become registered bookkeepers with the Tax Agents Board. And the other presenter is Ashley Evans. Ashley is a partner in AAA Financial Services. He's an ex-bank manager, and his partner is an ex-bank manager, and most of their staff, I think 8 out of 9 of their staff are all ex-bankers. And they offer a very interesting business model whereby they help with all types of financing. They have a real preference for graziers in far north Queensland, Western Queensland. They're based in Townsville, but they also handle financing work for clients all over Queensland and into the Northern Territory. So they're our 2 speakers next week to give you a slightly different view as we're hopefully heading towards getting ready to relaunch businesses post the COVID-19 problems. And I'll be back as the host. If you want to register for that webinar, please go to www.essbiztools.com.au webinars. If you need more information, you can contact us at ESS BizTools, and you can look at our Learn More, Survival in Difficult Times. Or you can send me an email, peter@essbiztools.com.au, or telephone me on that number, 1800-232-088. This virus will end. I think we all need to bear that in mind. And that's what Amanda was saying to you just a moment ago, that accountancy firms need to be geared up. There is some light that's getting bigger every day at the end of the tunnel. The Prime Minister is talking about various changes occurring in 4 to 5 weeks' time. Some of the states have changed some of their rules. In Queensland, from Friday night, you're going to be able to drive 50 kilometres. In a big state, that's not very far, but at least it's a start. So COVID-19 will not last forever, and opportunities will emerge. ESS BizTools and our affiliates, which obviously include Amanda and Paul and 8 other people from various groups that support accountants or small businesses, are keen to assist you, to guide you through this troublesome period so that you can emerge as a stronger business, hopefully by the end of September, a little bit earlier if possible, so that we can all get on with our lives post this crisis. And let's say that we're going to learn something out of this that you can then put into play in your business. So stay safe. Thank you for participating with us today or whenever you're watching this video, and have a great day. On behalf of Amanda and Paul and myself, thanks for being with us. Goodbye.
Thanks, Peter.
Thank you,
Thanks,
Amanda.
everyone.